Will the next global crisis hit Australia? Over the past few weeks, videos predicting a major global economic crisis, some even saying it could be worse than 2008, have been spreading online. You might have seen them. Or maybe a friend sent you one. So the real question is, should Australians actually be worried? Before you jump to conclusions, there are 5 things you must understand. And the last one is the most important of all. Global headlines versus Australian reality. Most of these warnings are coming from the United States and focus on problems inside the US economy. Increasing commercial property stress, high debt levels, and market volatility. But Australia is not the US, and our housing market does not behave the same way. To understand what really matters, let's break this down properly. 1. US problems don't automatically become Australian problems. The first thing to understand is this: not every US economic issue flows straight into Australia. The US is dealing with office buildings sitting empty, large commercial loans needing refinancing, potentially at a higher interest rate, stock market volatility. Australia's housing market, however, is driven by very different forces: jobs, lending rules, population growth, and housing supply. Global news can influence sentiment, but it does not dictate Australian property prices on its own. 2. Australian housing falls when jobs are lost. Not headlines. Historically, Australian property downturns happen when people lose jobs and are forced to sell, not because overseas markets are volatile. If households can still earn income and service their loans, property prices tend to remain resilient, even during global uncertainty. This is why employment data matters far more than online predictions. 3. Australia's lending system is more conservative. Another key difference is how Australians borrow. Local banks assess loans using buffers, meaning borrowers must prove they can handle higher interest rates than they're actually paying. Regulators also closely monitor risky lending. This doesn't mean the system is immune, but it does mean widespread mortgage stress is less likely without a major shock to jobs. 4. Global uncertainty affects confidence before prices. When global markets become uncertain, the first thing that usually changes isn't house prices, it's confidence. People delay decisions. Buyers pause. Sellers wait. This often leads to lower activity, not immediate price crashes. Understanding this helps avoid panic decisions based on short-term noise. 5. The biggest risk is personal, not global. And here's the most important point, the one that matters more than any global prediction. The biggest risk most Australians face is overstretching themselves personally, not an overseas crisis. That means borrowing to the absolute limit, having no cash buffers, relying on everything going perfectly. The Australians who navigate uncertainty best are not the ones who predict markets, they are the ones who plan conservatively. What actually helps in uncertain times? In uncertain economic environments, the most effective strategies are surprisingly simple. Understand your real borrowing capacity. Keep cash buffers where possible. Choose loan structures that allow flexibility. Make decisions based on life goals, not fear. Preparation beats prediction every time. Clarity beats fear. Global headlines will always come and go. What matters most is understanding how they affect you locally and making decisions from a position of clarity, not fear. Economic cycles are inevitable. Panic is optional. Stay informed, stay prepared. If you're unsure how global changes may affect your borrowing or property plans, seek clarity early. Finally, good decisions are made calmly, long before headlines force urgency. You don't need to subscribe or like this channel, but if this helped bring clarity to a noisy topic, consider sharing it with someone who might find it useful. Thanks for watching.